Stocks clock gains ahead of the New Year week. Auto stocks lead the charge, followed by financials, while realty and energy are the soft spots. Mid-caps underperform.
The rupee falls to a new low of 85.60 from Thursday's close of 85.27 against the dollar on sustained buying by importers. Dealers say that some of RBI's positions in the NDF market are expiring today, and the RBI may be allowing them to be settled in the onshore market.
UltraTech Cement picks up nearly 9% stake in Star Cement for little over 850 crores as consolidation in the cement sector continues. The transaction is expected to be the first leg of a bigger stake buy.
Concord Enviro, Dam Capital, Mamta Machinery, Sanathan Textiles and Transrail Lighting all debut on the stock exchanges with strong gains over their offer prices. The bumper listings are likely to boost the primary market sentiment.
And the architect of India's economic liberalization and former Prime Minister Dr. Manmohan Singh dies at 92. Tributes pour in from far and wide, and India declares 7 days of mourning.
You're with us here on Halftime Report on CNBC-TV18. I'm Hormuz Patakia, and with me is Anuj Singhal. Anuj, good afternoon. And the Nifty is back off the highs of the day. Again, that initial euphoria is starting to get sold into.
Good afternoon, Hormuz. You know, they say when the cats are away, mice are at play. Don't, for the next 3 or 4 days, just don't look at the market action and believe that you are in a new trend. The real test of the market would come on Jan 6 when the FIs would come back from leave. But once again, what's happened today, I'm calling it new series, same market. It's a market where buy on dips and sell on rally is working. There's a congestion zone, well-defined congestion zone of 23,850 to 23,950 thereabout. And it's the 4th day in a row that the market's gone there. This time it's actually gone a bit higher than what it's done over the last 3 or 4 days and slipped from there. It needs to break 23,950 to gain some strength. My sense is before the FIs come back from their leave, it's possible that the Nifty does a bit of a mean reversion trade and goes back to say 24,050, 24,100, the 10-day exponential moving average, maybe even 24,200, the 20-day exponential moving average. That's where the next resistance really is because, year-end NAV pop-up, FIs on leave, all of that is helping us. But the real test would emerge from the 6th of Jan. Today and tomorrow, expect very low volumes from the FI side. It looks like only we are working.
So it definitely looks like only we are working. But indeed, the Nifty is off the highs of the day. But in continuing our coverage in paying tributes to former Prime Minister Dr. Manmohan Singh, we now have Chief Economic Advisor V. Anantha Nageswaran, who is joining us. And Lata is here to take that conversation forward.
Thanks a lot for that, Hormuz. And Dr. Anantha Nageswaran, thank you very much indeed, sir, for joining us. You know him both personally as well as, India from an economist point of view. First, the latter, how would you analyze or how would you wrap up Dr. Singh's legacies for India's economy?
Thank you, Lata. Good to join you on this conversation. I think I really don't have to say anything more than what has been said by a lot of other illustrious people regarding his contribution and legacy to the Indian economy post 1990s, especially. I think he was the right man at the right moment for India to drive the economic liberalization. The fact that he himself was not an instinctive liberalizer, but he had the intellectual courage and flexibility to change his mind and champion economic liberalization. Also, very famously echoing some of the sentiments of Mr. Milton Friedman by saying that the time for free lunch was over, etc. When he moved when he spoke at the parliament, all those things are etched in people's memory. And to a large extent, the fact that India's growth rate post 1990s has picked up obviously owes a lot to the liberalization pursued at that time with the political support provided by the then Prime Minister, Mr. Narasimha Rao. And Dr. Manmohan Singh, therefore, will have an important place in the economic history of India.
Okay. Yes, take your point, sir. But you must have already been working perhaps in some place in Singapore, in somewhere in the banking sector in the world. The fact that India had a a convertible exchange rate, convertible rupee, at least in the current account, something which even a large economy like China is still struggling to do and has administered rates. Was that a talking point in your time?
Actually, when those decisions were made in the early 90s, after 2 or 3 rounds of devaluation, bringing the rupee in alignment with the curb market valuations, etc., the official exchange rate and the market exchange rate were aligned. I must say that at that time I was pursuing my PhD in the United States and not yet in the financial market space. But incidentally, my dissertation, as you know, was on exchange rate behavior.
Yes.
I think, yes, the current account convertibility and the gradual liberalization started then. And I'm also aware that I am sitting in this role, a role that he occupied 5 decades ago as a chief economic advisor. There isn't a major economic policy role that he hasn't performed in his illustrious career.
Yeah, fair point, sir. The second innings as Prime Minister, I mean, if the period of 1991 brought growth and wealth to, the middle class, so to speak, in the innings as Prime Minister, he at least tried to spread the benefits to a larger segment through the MNREGA, through the Food Security Act. Would that also be a lasting contribution, the social net?
I mean, yes, up to a point, you could definitely say that, yes.
Okay. If you look back, what is the enduring legacy you would say he has left
definitely.
behind?
The enduring legacy is that he unshackled, together with the Prime Minister, Dr. Narasimha Rao, he did contribute to unshackling the Indian economy in the 1990s, and all of us are still continuing to do that. And that important template was set then in 1991 in the wake of the balance of payments crisis that we faced. Yeah.
Mr. Nageshwaran, good afternoon. Dr. Singh did so many things that sometimes we forget some other reforms that he did. It was under his leadership when he was the Prime Minister that we had first the fortnightly review and then the daily review of petrol and diesel prices. Do you think at that point it was possible? I mean, a lot of people thought that perhaps that was something which was untouchable. After that, perhaps we have gone back on those reforms, but do you think that's something which also is something that he should get a lot of credit for?
Sure. I think that was also an important contribution. Agree.
Dr. Anand Nageshwaran, would you recall any personal anecdotes, any joke, any event?
No, I think I was probably not that close to him, except for 1 or 2 conversations I have had with him. And all I can recall is that even when I was not part of the government, but as a private individual, had come to his residence in 2002 when he was not in the office and wanted to brief him about an impact investment fund that I was helping set up, which was very early days for impact investing in India in 2002. And all I remember very well was not only he heard me out, encouraged me, and also came all the way to the gate of his residence to see me off as I sat in the yellow top black taxi. It was not necessary for him to do so. I was just a nobody at that time, and I had just come to brief him and take his blessings and his views. But for him to come and see me off all the way up to the gate just showed how, no matter how intellectually formidable he was, at his heart, he was a very simple man and a man of, great simplicity and courtesy for everybody to a fault. He was courteous to a fault. So those were the things I can recall in my very brief and one-off personal interaction with him. And that has stayed in my mind for a long time.
Okay. Well, that point is taken, sir. In fact, you are perhaps the umpteenth guest on the show saying that he came and opened the door for us to see us off. Dr. Subbarao said that, Ragurajan said that, I mean, clearly his courtesy and his simplicity is something that everyone took home after a conversation with him. Would you say his ability to delegate and ability to be advised is something that, interpersonally, not just big policymakers, is something perhaps everyone should take home? That's one thing we got from everyone.
I do not know enough to comment on that. Yeah.
Okay. All right. So anyway, final thoughts, abiding legacy, unfinished task, anything you want to leave us with?
No, I mean, I think we already spoken enough about the fact that subsequent governments, regardless of political background, etc., have continued to stay on the path of economic liberalization. I mean, the current Prime Minister has repeatedly said that government has no business to be in business, and he has taken up the cause of advancing the ease of doing business. We have liberalized foreign direct investment rules, and corporate taxes are lower, facilitating capital formation, etc., and also fiscal prudence and reduction in the fiscal deficits, etc. All those policies that the current government is pursuing, that the late Dr. Manmohan Singh would have been quite happy to endorse and approve of.
Point taken, sir. Thank you very much indeed for joining us with your thoughts and memories.
Thank you.
Well, this is indeed a point that we should be proud of as citizens of India. The Indian political economy and the political system is able to take the baton. What makes for a good relay race? Only when each runner cleanly hands over the baton, and that government after government is, they're not cancelling previous, walking back on big policy decisions taken. The cleanness with which policy is being handed over from government to government is what I think we should take home from what Dr. Nageshwaran is telling us.
Absolutely. And when Dr. Singh had said that history will be kinder to me, we are sort of getting to know that with just one day, right?
Yes.
I mean, he's passed away yesterday, and already we are saying that, yes, maybe towards the end, especially, a large section of or some section of media was a bit unfair to him. And also, public memory is very short. It was 2009 when the stock market celebrated his coming back with two back-to-back upper circuits.
That's right.
Till then, we had seen down circuit in the market. That was the first occasion that we had seen not just one upper circuit, but two upper circuits.
No, that's right. This is 2009 May, I think.
Yes.
In March, of course, the market was looking at bottoming out, but it was still struggling.
Yes.
Remember the March of 2009? Things were going from bad to worse.
That was a time which
Sensex went below 7,000 on a day.
Exactly. All the talk was of policy paralysis and all of that. And when those two upper circuits were hit, what it also meant was that it changed the option trading in India forever, because people stopped writing calls or writing naked options after that day when the Nifty was up 15%.
And you burnt your fingers.
Yeah.
I think for me, it's just that the first innings as finance minister, he liberalized and unshackled the economy as guest after guest, and Dr. Nageshwaran also told us. The second part was giving reforms a more humane face. When we were hit with COVID, we had a net. We had MNREGA and we had the Food Security Act, which was giving food grains to a large number of vulnerable people, not all of them, at 2 rupees or 3 rupees. This government took it forward and made it free for 5 rupees. But the point is that net was gotten ready under Dr. Singh. And even the UIDA, the National Identity Authority, was started under him. The UIDA under Nilekani had drawn the blueprint. And this government very cleanly took it and did not try to go back on those reforms. And that's become, of course, the bedrock of future reforms in India.
Okay, Lata, thanks a lot for that. Meanwhile, Hormuz, just want to say one thing. Okay, rupee is at 85.65, and that's actually very sharp depreciation.
This is that 3% is for the full year 2024.
Yeah, but even
today's
today, half
depreciation,
a percent.
absolutely right.
0.5% today. I mean, I was referring to today's only 0.5%, but that's also quite sharp. That
Absolutely, you're on the ball on that for the past so many quarters. For so many weeks.
Ever since
definitely
the
since
trading
Trump
angle was taken away, you've not seen this kind of daily move. I mean, you've seen gradual moves, but this kind of daily 0.5% move is something that I don't remember in the recent memory.
You are right, and this day will be remembered for that. Many people have called out the Reserve Bank as being way too, ranged in its or allowing too ranged a movement in the rupee. Even when we started to see the depreciation after November 7th, after the Trump election, it has been extremely gradual. And as the bulletin told us, the rupee had actually appreciated by 8% in the month. It was overvalued by 8%, not appreciated. Overvalued by 8% as of November, when other currencies were depreciating. since then, we have always seen the Reserve Bank come in and stop the currency's depreciation after the first 7-8 pies. Today, it is 40 pies depreciation. You know, we closed yesterday at 85.27, and now we are, almost at 67. So it's a 40 pies depreciation, which is, as you say, one of the sharpest 0.5% depreciation we have seen in a single day.
Oh, absolutely. And just before we take a break, Hormuz, Kohli ran out Jaiswal and then got out himself. So
not the cue I wanted to take before going into the break, but we'll definitely take one for sure. More on the markets and stock-specific action continues on the other side. Stay tuned.
welcome back. Well, the market's cooled off once again, and look at the mid-cap index. That's now actually down by about 100 points, though the advance decline is still in favor of the advances, but the index has slowly gone to the low point of the day, the mid-cap index, that is. Advance decline also now narrowing a bit over there. Let's talk about some stocks, and we have our team now joining us to take us through some of the buzzing stocks. First up, Ultratech Cement has picked up near 9% stake in Star Cement for a little over 850 crore rupees. The transaction is expected to be the first leg of a bigger stake buy. Sudarshan is here with more details. Sudarshan, good afternoon.
That's correct. So first part of Ultratech Cement and Star Cement deal is done. Ultratech Cement today announced that it has acquired 3.7% stake in Star Cement for rupees 851 crore at a price of rupees 235 per share. So today Star Cement block deal window saw exchange of hands for 3.7% equity. Now the question is, who is the seller? Basically, Star Cement has two major sellers. Those are Bhajanka and Chamaria groups. Now what we understand that one of these two promoter groups is likely to have sold certain part of its stake. Now talking about Star Cement, it's one of the major players in northeastern market of India, and currently it has 7.7 MTPA cement capacity and 6.1 MTP of clinker capacity. Now as of FY23, company had 5.67 MT of cement capacity, which company plans to increase to 7.67 by FY25 and 9.67 by FY26 and further to 12 million tons by FY27. Now talking about on what levels the deal is done. If you take 7.67 that company has targeted for FY25, price comes around $150 per ton, and if you take FY26 level of 9.67, price comes to around $120 per ton. Now the final question is, will this deal also go the similar way that Ultratech has done with India Cement? Because if you remember, in the first tranche of Ultratech and India Cement deal, company had acquired the stake from Damani family, and after that to acquire certain part of the stake from N. Srinivasan, company had to pay the higher price. That will be keeping track going ahead.
Keep a track of that indeed. Sudarshan, thanks a lot for that. The Star Cement off the highs of the day, but still holding on to gains of around 3.5% as we speak. By the way, the rupee is now 85.68 and it's now set for its biggest single day fall in 6 months is the currency. So keep an eye out on that as well. But the other stock that's moving around in trade today is IndusInd Bank, and that has seen some gains today after it seeks to offload around 1,573 crore rupees of microfinance loans. Abhishek is here with more details on that. Abhishek.
Well, IndusInd Bank has put out a release which says that, they intend to sell out 1,573 crore of the MFI loans. Now, remember that, any lender can only sell its existing NPAs on which they have made fully provisions for. So, the reserve price is at 85 crore. MFI is not the kind of secured loan wherein you will get a higher, price. So, this is an unsecured loan, and that is why if you check into account, given the fact that this 85 crore will form around just 5.4% of the total outstanding that they intend to sell. So the gross NPA and MFI portfolio was close to 2,270 crores in the previous quarter. So this amount would form around close to 70% of the gross NPA level that we had in Q2 FY25. So calculation shows that the average ticket size of the pool that's being sold is about 14,820 per loan. Just a key alert, and now IndusInd Bank has been the worst performing Nifty stock this year so far, while Nifty has gained about 10% year to date. IndusInd Bank is down more than 39% year to date. Back to you.
Indeed, Abhishek, thanks a lot for that. The worst performer on the Nifty this year is IndusInd Bank. Well, it's now time for Growth Code, an initiative by Grow and CNBC-TV18 designed to provide you with the insights and strategies to navigate the market and make informed trading decisions. Today, we'll demystify how traders can prepare for black swan events.
The market is a game of delicate balance. Traders have to build positions, manage risks, and always strive for a steady upward trajectory. But sometimes a sudden unexpected disruption can overturn the whole game. Such events are called black swans.
So there's a book by Nassim Taleb in which he says that by the outset you cannot predict that a black swan is going to come. In fact, they say that there are 12 recession outcomes every year, but hardly any materialize.
It takes only one shock to show how devastating a black swan event can be. In 2008, we got a stark example of this. The subprime crisis came seemingly out of nowhere. From mid-January 2008 to mid-September 2008, Nifty lost 35% of value. Lehman Brothers filed for bankruptcy on September 15, 2008, and Nifty lost another 25% in the next 3 months to 3,000 level by the year end. Investors lost fortunes, and retail investors faced the hard brunt as the Indian markets lost 50% of market capitalization in a single year. The 2020 COVID-19 pandemic presented another black swan event. On 28th February, Sensex crashed 1,194 points in early trade. But this time, Indian traders were better prepared.
So traders were able to manage the 2020 COVID crash. Traders were aware that you need to manage your overnight risk, but I made a rule that no matter if I'm carrying any overnight trade, I'll hedge the trade. So if I had naked futures, I would have lost 3.5 lakhs on a single lot. But due to my hedge, my loss on this trade was only 20,000.
The lesson? Black swan events can't be predicted, but with planning, you can cap your losses.
So one key lesson which I have learned is no matter how sure you are about the markets, every trade should be hedged overnight. And in case of any major correction, you should not lose more than 5%. And the way to do that is, suppose you are long in any instrument, you buy a protective put, which means you're buying a put certain percentage away from the current market price, so that even in case of any correction, your losses are capped and you're not losing more than 5% of your trading capital.
So the market may throw curveballs, but with the right risk management, you can endure these unforeseeable events.
Welcome back. The Nifty continues to cool off from the highs of the day, and the rupee, as we speak, also continues to depreciate. 85.73 now against the dollar is the rupee, set for its biggest single-day fall in nearly 2 years. Now, for the currency, 0.5% is the depreciation that we have seen on the currency in today's trading session. But as we just mentioned, the Nifty continues to cool off as well from the highs of the day, making a high of around 23,950, but has since cooled off. What next for the index? Ruchit Jain of Motilal Oswal Financial Services is joining us. Ruchit, good afternoon. Thank you so much for joining in. You know, the Nifty, a similar story playing out all through the week, reaching a congestion band, 23,850, 950, and since has not managed to cross that. What's in store now for the index? What are the key levels? And couple that up with your stock recommendations for the afternoon as well.
Yes, hi, very good afternoon. Well, if you look at the index, then the recent correction has mainly been led by FIs selling in the cash segment, as well as due to the short positions in the index futures. And if you look at yesterday's rollover data, then only 18% of the positions are on the long side now, and about 82% of the positions are on the short side. So still there are no signs of short covering by them, and unless we see that short covering data coming in from the FIs index futures, I think markets would continue to see some sort of time-wise corrective phase now. Now we are hovering around the 200 EMA support, but still no signs of up move, which clearly indicates that we could see some time-wise correction. The 20 EMA resistance would come around 24,100. So probably we are expecting markets to play within this range of 23,500 on the lower side and 24,100 to 24,200 on the higher side. So expect some time-wise correction to continue. Now, very selective stocks we are recommending to our client. Now, one of the strategy what we have seen that which is working at this juncture is look to trade only the stocks which are outperforming or which have not fallen in last 2.5 months. So I think such stocks, when they breach their resistances, they tend to give good returns rather than playing the stocks which are showing bottoming out sign. So a couple of names that I would recommend from such basket. One is Glenmark Pharma. So definitely, I think Pharma is one basket which sectoral indices is looking quite positive over here. So Glenmark would be one stock where one can play out the breakout which we have seen today. One can go long over here with stop loss below 1550 for potential targets around 1670. And within the OMCs, if we see in the recent correction, HPCL has shown a good relative strength compared to BPCL and IOC. And this stock has now given a breakout from a falling trendline resistance. So it seems that a relative outperforming strategy which I just shared, I think HPCL can do well in the near term, based on this theory. So HPCL is one stock which short-term traders can look for buying over here with stop loss below 400, expecting target somewhere around 450.
Okay, Ruchit, good afternoon. Just wanted your view on IndusInd Bank, 2.5% higher in today's trade from the oversold ground. Any view on this stock?
Yeah, hi, very good afternoon. Within the private sector banks, if we see the recent trend, then the trend has been negative for this, and it has been a relative underperformer. It does that the momentum readings are a bit oversold. The stock has corrected in last 3 months from 1450 to 950 without any meaningful pullback. So I think there could be some pullback move to relieve the oversold setups. And in that pullback, we could see the stock showing pullback towards 1020. But again, that would not be a change of the trend, but one should take this just as a pullback move within a downtrend.
Pullback move within a downtrend for IndusInd Bank. Ruchit, thanks a lot for joining in, sharing with us your views on the index and specific stocks as well. But as we slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app, getting instant access to breaking news, in-depth articles and financial world updates at your fingertips. You can download the app from the Apple Store or the Google Play Store right away.
Welcome back. Well, the market's still in that band, 23,850 thereabout. The Nifty is just trying to take support over there. The big story, of course, has been the currency. The rupee went to intraday low of 85.73, now at 85.64. Just want to point out one stock, Oracle Financial, in the mid-cap IT space. That's the one stock which stands out and is now trading at the highest point of the day. That's OFSS for you. But there's another stock in focus, that's Choice International. That's trading in green after receiving an in-principle approval from SEBI for setting up of mutual fund. Pamakshi is here with more details. Pamakshi, over to you.
Well, thank you so much for that. Choice International is in focus after they've received an in-principle approval from SEBI for setting up a mutual fund. Now, keep in mind that the company will have to set up an EMC and trustee company in accordance with the applicable SEBI regulations and other applicable laws. And this is still, a long process. Certain other formalities need to go through, but the in-principle approval has now come through, and that bodes well for the company. Now, keep in mind that Choice International is a name that is not often spoken about. So let me just give you a brief background about the company. It is one of the leading financial conglomerates. It has it offers several services to customers, which include stockbroking, wealth products, insurance distribution, MSME lending, government advisory, as well as investment banking. Now, when we look at the revenue breakup, the broking and distribution accounts for a majority portion of its revenue, accounting for nearly 64%. Post that comes NBFC accounting for nearly 10%, and advisory accounts for nearly 26% of their revenue mix. Now, keep in mind that the company has shown a very robust pace of growth over the last 5 years. In FY19, their revenue stood at 116 odd crores. It has now jumped up to 750 crores by FY24. In the first half, of course, they reported a revenue of almost 448 crores. The revenue has grown by almost 6 times from FY19 to FY24 and continues to grow. Net profit too has seen a sharp jump of almost 22 times from 5.9 crores in FY19 to 131 crores till FY24. So with this in-principle approval, they're looking to diversify their business. Of course, it will be a complementary business, so bodes well for the company. An additional lever of growth is what they're adding, and therefore this bodes well for Choice International, and resultantly the stock is up in trade.
All right, Pamakshi, thank you so much for sharing that. Not a stock that we speak about very often, Choice International, but in the green nonetheless. There's one stock and a theme that I'd want to point out before we go into a break. Phenolics Industries is one stock because it's still holding up gains of around 10% now at the highest point of the day is where Phenolics Industries is 261 on the stock. Has been an underperformer over the last month or so. And a theme that I wanted to point out is all of these footwear companies that are doing well in today's session, be it Bata, be it Metro Brands, be it Campus Activewear, all of them trading with healthy gains in today's session. Not Relaxo, but Bata, Campus Activewear and Metro Brands are the three stocks. As Campus Activewear and Bata gains of around 4% each, and Metro Brands is trading with gains of close to 7% now at the highest point of the day is these footwear companies. Remember, Red Tape, one of the footwear companies yesterday, the demerged entity of Mirza International, announced a bonus issue and a dividend in yesterday's trading session. That's just a part of the story. That too is trading with gains of close to 1%. But as we slip into a short break, more on the markets and specific stocks on the other side. Stay tuned. Welcome back. The Nifty continues to remain in that 850 to 950 band for now, but a theme that is doing well though, other than the footwear companies that we just mentioned before going into the break, was the pharma stocks. And the Nifty Pharma Index up 1.5% in today's session as well, and most of the pharma stocks are doing well for themselves. They pull up Akums Drugs first up 9.5% higher. It's been very, very volatile. Very recently, this week, it announced an order win as well with a European company. So 9.5% higher on Akums Drugs. And by the way, it's still below its IPO price, though, of 680. We'll keep that on your radar. Ajanta Pharma, too, at the highest point of the day, 5% higher there as well. It's been an underperformer over the last 1 month. Glenmark at the highest point of the day, up over almost 4% in today's trading session. And the other pharma names that are doing well are Abbott India, Laurus Labs too at the highest point. So most of these pharma stocks are trading at the highest point of the day, be it Abbott, Laurus, Akums Drugs, and most of the other pharma names as well. But it's time for another short break. On the other side, Manisha Gupta joins in with Vipul Shah, the chairman of the Gem and Jewelry Export Promotion Council. Stay tuned.
Welcome back. Joining us on a phone line now is Mr. Vipul Shah. He's chairman at Gems and Jewelry Export Promotion Council. Mr. Shah, thank you for taking our call. We know you're at the airport. So you've had a recent meeting with the finance minister, and we do understand that GJPC has put forth its demands or requested for some key things that the industry wants. If you could put that out for us in a 1, 2, 3 perhaps.
Good afternoon, Manisha, and thank you very much. First of all, we started by thanking the Finance Ministry for considering all our demands in the year 24-25, which were really supportive by slashing down the gold duties and gold and silver duties. So that has really helped the industry. I can say it is like you can see a lot of FDIs are inflowing, a lot of IPOs in the jewelry industries also are subscribing so many times. And I think in next 2 years, we are seeing a retail more than 3,000 stores opening. So that's going to create a lot of employment, and it is going to also boost our economy as such. And the main thing is that what we requested also that whatever the duty drawback, which is we have it in gold and silver and other semi-precious. Similarly, the platinum needs to be also looked into because the gold prices are very high currently, and platinum needs to be taken care of, and similar duty drawbacks needs to be put in place. So that was one of our demands. One thing that we are, with the industry support, we are coming up with a big jewelry park at Mumbai, and similar parks we are looking at Bangalore and Meerut. And for the same, we have requested that this jewelry parks should be considered in the harmonized structure, infrastructure, so that they can get a special priority, and that will also boost the jewelry sector, and it will create lots and lots of employment. So these were the few things which we already discussed. And at the same time, we also asked for some support as far as diamond industry, for diamond segment is concerned, because as you know, the diamond segment is having recently tough times. And for the same, we requested that they support some kind of marketing support the way they did for hallmarking, for educating the consumer. So similarly, Similarly, to educate the consumer, we have requested that there needs to be a budget where consumer, when they go and they're buying anything from the retail store, they should be aware that what are they buying, whether it's natural or lab. So some kind of marketing support needs there. So that could be also helping the generic marketing for this segment. So that can also really boost all the sentiments as such. So yeah.
Yeah, Mr. Shah, the diamond part is what I want you to elaborate on, because we do understand, we keep hearing stories from Surat on how there's a bit of a slowdown, on how the international markets are not so strong back yet again. And yes, there have been concerns about promoting natural diamonds well to the consumers. Would you say that this is perhaps a focus point, and the finance minister would need to look at this point for sure during the budget?
Yes, they were also similarly. They were concerned with the dropping of exports in the gem jewelry sector, and I'm glad that the ministry is really taking care. They are constantly behind the council and trying to understand and what are the needs, what are the things which they can also support to revive the industry as such. So yes, it is. They are aware that it is because mainly of demand and supply disruption. And now, as you've seen after Diwali, also the production has gone down. Mining companies are acting more maturely by restricting the supplies. So that is now we are seeing stability. We are seeing the stability. We are seeing sales coming from US. It's also jewelry sales that have picked up well in US, and we are confident that in coming months after the Chinese New Year, because China, if you've seen since post-COVID, they had not opened up. So most of the Chinese means now they have already destocked their goods. So now even after Chinese New Year, some demand picks up. That will really boost the industry. So overall, things should look good. We'll have a new president coming up in the U.S., Mr. Trump, and with the policy, what exactly he will be looking into. That also will help us for focusing more on the U.S. market, as relations with U.S. is also great.
Oh, absolutely. January is going to be quite exciting and uncertain in that sense. Also, Mr. Shah, your IJEX, I mean, I went to that office in Dubai, and I do understand that you're looking to expand those trading centers as well. How are you looking at that? And is the government helping you do that?
Yes, that's a very good concept, and it's been very well welcomed and very well accepted by the ministry. And it is focusing only for the MSMEs, because they are the first ones who are looking for exporting their goods, and really, and for them to look at this big kind of expenses we are traveling around and going. We support them by giving them a small space in that IJEX, and where they have to have a minimum rentals, and we support them with all market initiatives as such. And ministry is supporting with this concept, and we are looking to expand many more IJEX across the globe gradually.
Mr. Shah, thank you so much for taking that call yet again. And as said, the DJPC has had its initial meeting with the Finance Ministry, where they've thanked them for all of 2024, because we did see a lot of big measures come in. And the next budget is what is being prepared for when it comes to diamonds. And of course, more centers, jewelry parks, etc. is what DJPC is anticipating. But with that, that's all the time that we have on Halftime Report. Business Lunch will take all the action ahead.